Good morning, everybody. Welcome to the morning volatility report. As I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you back to another morning of What's the Fed Gonna Do? I think on Option Insider Radio on the option block, we should start having a game. What's the Fed gonna do? Valentino is back. Valentino is home, I believe. Happy, healthy, and hail. That's Mark's, the latest Sebastian. He is back. So I think all is good over there. All right, and with that, Mark, of course, the founder of OptionPit.com, and also the manager of our fund, the Carmen Line Ball Fund, which is doing okay this year, by the way. Anyway, so maximizing profits with weekly option trading. Of course, if you're a gold member above, or actually an Option Pit Live member above, you can attend. Okay, you get all kinds of great stuff at Option Pit. Here's our store. If you're a gold member, you get all the stuff. You get all the stuff plus our archive of, I don't know, probably 100, maybe 200 hours besides our basic option trading class on how to trade the vol products, how to understand volatility, how to incorporate vol into your trading routine, and basically just get how it works. But again, you get everything in the store. If you're a gold member or above, we have our bestseller ever this weekend on. So go to optionpit.com/events to sign up for our weekly trading class. Speaking of, Mark put a little buyout of some UVXY puts. I think, what were they? The SEP 220 puts yesterday. You can go check it out in our blog, the trade idea of the week, into the Fed. Okay. So what do we have? And let's look at that. So if UVXY is down, the VIX futures are down. Specifically, September and October. And let's take a look here. You've got a 1336 cash. So VIX yesterday actually traded close to 14, maybe a little over, the way I see it, for a brief while, just like it did in the FOMC meeting last week. Remember, vol is so low, it takes very little for it to expand at this point, especially in a SEP and October cycle in the VIX cash. So we are still looking at August 1365. Where was VIX 5 days ago? Okay. Last week, or even this week, right? We got Monday, Tuesday, Wednesday. So this was Monday. This was Tuesday. We got a markdown into the settlement the day before. Good day to close. We closed some puts there. And we spent the rest of the week going back up. Is there any reason to believe we do not get back down to 1180 or lower in VIX if this Fed thing just goes by? It is a strong possibility, which we talked about yesterday, which puts big pressure on some of these puts here. So we're starting to see a little bit of drop in these futures. But, I think we looked at 13 and a half puts yesterday, just not very expensive relative to where things are. Okay, we'll look at a couple of plays today. Maybe even buying an in-the-money strangle might start to look good. Because, at least for right now, you've got that very, let's just call it the volatile relationship between the future for next week and cash. This future is laying literally right on top of the cash VIX for next week. Meaning, generally, that's a market saying, I'm not quite sure what's going on. If you do get up to, literally a 2-point drop in here, that's a huge relative move. So you can see like the 13 puts, the 12 and a half puts. I think these things could be some buys for next week. Right? And, you buy some kind of a cheap upside hedge in case there's a surprise that puts the market, because real easy next week, if the market starts to sell off, to see a 16 VIX, right? Literally, you have This cycle will turn on a dime. It's a very explosive gamma with the potential, with the VIX making a 10 to 20% move, it's possible, right? Just a 10% move down is $1.30. Okay, that's only 12. We traded 1180. So between now and Wednesday, and sky's the limit, obviously, if anything, if the market gets freaked out. So these options, I believe, are underpriced really relative to what's possible. So we'll look at that in the chat today. So far, that's kind of been the idea all along, similar to Mark's idea yesterday on UVXY. There is, again, the October future is not at 1670. But a move down to 16 certainly possible. And SEP with only after next week, you got 1, 2, 3 weeks to go. If we trade into the 1180, that's $3 over. That's massive, massive, massive pressure on this. And we don't have any earnings or anything going on. So it's not that something can't happen in the meantime, but there is, there's big potential in short-term moves with the weeklies, I would say. It's just setting up because of how Yellen's speaking. So we'll examine that today in our chat room. If you're not an Option Pit member, you should become one. All right. Everything else, we took a couple of blogs this week. The banks seem to be taking off. Still like them as far as they have done zero performance this year with the market up at an all-time high. Still like banks, possibly a hedge trade in here as well. The other thing that could be interesting for us is we looked at IBB, possibly some time spreads. There's a little bit of back and forth now again with maybe even a double calendar, something like that in here. Give us some room. We'll see if we can price that out. Again, hard to fill. But, trades like that, and we have our weekly class this week. Just hard for you just have this extremely, extremely low realized vol. Okay, they've barely taken anything out. Right, you're getting a little, the Ox cereal down 9 cents. That's nothing. Maybe some marks here, but for the most part, nothing's come out. Obviously, the August here, the volatility is very high because you have a high potential one-day move today. Don't know. Okay, do we get back to all-time highs? Because everybody's happy again. Certainly possible. They are pricing some of the upside. We could also look at some cheap butterflies in here for the upside. My guess is they're going to land somewhere 220. That the market is dying to get that, so we'll actually see what happens after the speech. All right. And with that, I will talk to all of you later.